Anglo American looks to break itself up as it fends off BHP's $43 billion bid. Welcome to Market Insight, I'm Ramzan Karmali. The London-listed miner laid out plans for a potential breakup of the group via a demerger or sale of its steelmaking coal, nickel and platinum businesses as it tries to see off a takeover from the world's biggest listed miner. Today's announcement comes just a day after Anglo American rejected a raised $43 billion offer from BHP. Well, for more analysis of Anglo American's new strategy and much more, I'm joined by Anna MacDonald, independent equity analyst. Anna, thanks so much for joining us. So what do you make of Anglo American's plans to break itself up, and will having a simpler model actually work in fending off BHP or anyone else for that matter?
Well, it's all to play for, and it will come to see in the coming weeks whether shareholders are going to back the Anglo suggestion or BHP, or whether indeed someone else might come in. As you mentioned, this has twice been rejected by the Anglo's board, but it's worth realizing that they've been under shareholder pressure previously to simplify the business, because it feels that sometimes the very strong elements of the business, that might be the iron ore and the copper, those kind of results and that strength and demand that you see underlying for those parts of the business is obscured by other parts, such as the De Beers business, platinum and coking coal, as you suggested. So we'd also seen that some activist investors, such as Elliott, had joined the shareholder register and really starting to put pressure on the Anglo's board. There are some signs that this deal is being more welcomed in South Africa. One of BHP's demands was a multi-step deal, really. They wanted Anglos to dispose of all their South African assets before then being incorporated into BHP Billiton. However, Anglos have specified that they would keep their Kumba iron ore mines in South Africa, and that does seem to have received a slightly better reception from the South African government. So that might be a little bit more that might be a little bit more feasible. Still, they're talking about exiting diamond business, the De Beers business, which has been part of Anglo since 1926, and platinum Amplats in South Africa, which they have a 79% stake of. They are talking about disposing of that, and those shares are currently down around 10% in Johannesburg.
Well, one company that's in the middle of a turnaround at the moment is Vodaphone, and it reported a rise in annual profits. But how much is riding on this proposed UK merger with Three?
Well, one of the UK merger of Three is still with the authorities to be approved. That's about a 7 billion revenue business for Vodafone, 7 billion euros. Actually, the biggest part of the business is Germany, and that's the real area of focus at the moment. I think that it's around 13 billion revenues, and I think there was most of the rise today in the Vodafone share price is down to the fact that Germany seems to have stemmed a decline. They've managed to reduce EBITDA is still down, but they have managed to offset some of their customer losses with higher monthly bills for mobile and broadband. And there's been a lot of eye on Germany as well, because there are new regulations coming in, and it's going to affect them at the second half of this year, as housing associations are not going to be allowed to bundle mobile and broadband services, TV and broadband services into rents. So that will hit Vodafone, but they are quite confident, and CEO Margarita Della Valle has talked about confidence that in fiscal 2026, Germany will be quite strong. They've also, these results are the first where they've been excluding their Spanish and Italian businesses, which they have been in the process of disposing to Zegona and Swisscom, respectively. So the shares are up quite well today, and I think that's because of that German news.
Now let's move on to some economic data we had out today from the UK job market. And wage growth for the 3 months to April came in at a stronger than expected 6%. How much of a headache is this for Bank of England policymakers? Is a June cut looking less and less likely now?
There hasn't been a huge shift today, a little bit around the edges, and the way you look at that is the chances of a rate cut seem to be about 50%. And still traders seem to be expecting 225 basis point rate cuts by the end of the year. Sterling did weaken a little, which would imply that perhaps that rate cut still is on the cards. But it does put the Bank of England in a bit of bind Hugh Pill, the chief economist, has said that these current rates of increases is not consistent with their long-term target of 2% inflation. And whilst we're seeing more vacancies and slightly higher unemployment benefit claimants, there is still quite a tight labour market out there. Worth paying attention to mean payroll data as well that's come out today, which shows a 7% rise, and that's mostly probably due to national living wage increases that came through in April. But we're not absolutely, I think the Bank of England will want to see another set of data. And they also get inflation data in the 22nd of May, and their rate decision isn't until the 20th of June. So there is some time to try and build up a bit better picture from the data.
Anna McDonald, as always, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.